I did have a question. So if
Yes.
someone wants to know of closing costs, that would be like, I could do that net sheet. Would that give them like just a ballpark?
Buyer or seller?
Buyer.
Buyer. Okay. So usually what I recommend for my buyers is I usually tell them it's going to be between 2 and 2.5% of the purchase price.
Oh, okay.
You can use the online net sheets like through ORTC or whatnot, but here's the problem with that is that most buyers, most of their closing costs are going to be controlled by their lender.
Got it. Okay.
So it depends if the lender charges a processing fee or an underwriting fee, or if they're paying points or whatever factors into it, as well as what the lender is going to require to set up for their prepaids for their taxes and insurance. So most buyers put their taxes and insurance into their payment. And then what'll happen is at close of escrow, the buyers are going to pay their prorated amount for the property taxes that are due from the date they take possession until when they become due again. And their lender is going to set up an impound account with X number of months of taxes and insurance in that account. They're always going to pay the full insurance amount up front. So, you know, most average insurance, I would say, is like $1,200 to $1,400 a year. Unless they're in a high fire zone, then all bets are off.
Definitely not.
And then they set up, so usually your hazard insurance, your homeowner's insurance is paid for the full year at close of escrow. Plus they take like 2 months into the impound account. And then the taxes, it depends on what time of the year it is, how many months they're going to put in that impound account. As we get closer to the end of the year, when those tax payments become due in November and April, that doesn't sound right, but we'll just go with that. November and April, due in November, late in December, and due in, I think they're late in April. Anyways, then they're going to take more because you've got 2 payments right on top of each other that are due, versus if you take possession of it in April and all the taxes have been paid, they take less in the impound account because they have more months to make up for it. But it's usually between 4 and 6 months of reserves in that hazard insurance impound account. So usually if you tell people it's going to be between 2 and 2.5% of the purchase price, it's usually a fairly solid estimate.
Got it. And just so I'm tracking correctly, closing costs is cash out, not part rolled into loan.
Correct.
Right? So like I just did one, 650 is the figure that I'm going off of, and I did 2% and that's $13,000. So they would need that. But then if they come in and they're buying, let's say they don't have first time home buyers or anything, what is the average like put down for like
so down payment for a buyer varies greatly, right? You might have somebody that's putting down 40% versus so usually the minimum is about 3.5%. So an FHA loan requires a 3.5% down payment. Conventional, I think they've got one that's like 3%. Most conventional though are going to put 5 to 10% down. Travis Credit Union does still have 100% loan option, just so you know. I like Travis Credit Union. I have nothing against them. If you talk about some of the mega banks out there, I would be like, don't go there. But I like Travis. You get like a actual loan officer that you worked through the whole process. They're fairly good at getting deals closed these days. They're great to work with, so I have no problem with them, but they do have 100% loan option for qualified buyers.
Do they have more costs? Like why are they giving out that? It's just, they're those people.
It's a portfolio product for them. So they're credit unions. So our credit unions, it's good to go around and talk with the different smaller banks, the local community banks, and see what they have to offer. Like, Valley Strong, I always have to think about what it's called. Valley Strong has a land purchase option, right? So not all lenders have land loans that are available. So they've got like a land option. First Northern, I know, has a rural home living portfolio product where it has a lower interest rate than like your regular conventional financing for people buying larger lots. It's not fixed for 30 years. It's only fixed for 10, but the average person moves in like 7 years anyways. So just something, but it's about a percent lower than the current prevailing interest rates. So it's kind of a good deal there for somebody who's looking to get into their own property. And it's not an interest only, and it's not a negative amortization. So they're paying the full payment. It's just only fixed for 10 years. After 10 years, it will adjust. So they either need to watch interest rates and then jump on them if they dip a little bit at some point, or just chance it out for the chance that you're probably going to move before it ever starts adjusting. Travis has that 100% option. So it's a good idea, right? So we mentioned talking with lenders and kind of knowing like who can work with low credit scores, who has first time home buyer programs, who could do manufactured homes, because that's a whole different beast. And then also like what did local banks have to offer as far as we call them portfolio products? Because most banks, right, you work with a mortgage broker, what they're going to do is they're going to take that loan, they're going to underwrite it and match somebody's overlays, right? Rules and regulations set forth by like Fannie Mae and Freddie Mac, or the FHA, the Federal Housing Administration, or the Veterans Administration, right? VA. They're going to match those rules and regulations, because what they're going to do is they're going to close that loan and then they're going to sell it on the third market to somebody, an investor who's going to buy that loan. So, right. So if I close with like Cross Country Mortgage isn't going to be who I'm going to write my checks to. They're going to close that loan and they're going to sell it to Wells Fargo or Bank of America or whoever that's going to actually service the loan and take the payments. Okay. So they're setting it up so an investor will buy it. Okay. Portfolio.
Amy,
yes.
You're not on video.
It hates me today. Yep. I think my camera's having problems. Oh, there we go. We're back. All right, we'll try that. If my camera disappears again, let me know. Otherwise, we're not that fabulous, so it's all right. So a portfolio product means that they're not going to take it and sell it.
Maybe if Camille would just move her mouth while you're talking, that way it wouldn't look so weird. I'm looking at her and you're talking, it's kind of weird.
Nice. So portfolio, on portfolio, they hold it in house. So like the 100% program with Travis Credit Union, your payments are probably always going to be made to Travis Credit Union. The land program with Solano First, your payments probably, Valley Strong. It used to be Solano First, now it's Valley Strong. Your payments are probably always going to be made to Valley Strong, right? So on the portfolio program with First Northern, that rural home program, you're probably always going to make your payments to First Northern. So they hold more in-house. Travis as a whole holds more of their loans in-house, which is kind of nice because you're not getting transferred all the time. And I don't even know how they work it, but somehow like you make your payment and then your mortgage accrues a little bit of interest. I think it's on what's in your impound account, and they give you that little bit of credit. Like it's pennies every month, but you know, pennies add up. 25 cents a month adds up over time, but you do make a little bit of interest. I think it's probably on your impound account. And I also know that Travis Credit Union was fabulous with the private mortgage insurance. They just I emailed them at some point because my mortgage used to be with Travis. Is it still? Maybe. I don't know who my mortgage is with. That's a good question. It is still with Travis Credit Union. My new one is. But at one point we had Travis Credit Union, we had mortgage insurance on it on a previous property. And I just emailed them as like, hey, I think we've got enough equity in our house to drop our mortgage insurance. What's the process? And they're like, well, here's the process. And the next thing I knew, next month I had no mortgage insurance on my property. So they had run valuation. See, it just
we lost you again.
Yeah, I see that. We're just gonna go here. There we go. Now you're just gonna get me and not Melissa.
Hallelujah! I'm gonna sit up straight anymore. No, I'm just kidding.
There you go. So that's how the portfolio works versus an investment, right? So the mortgage brokers and stuff are always looking to sell that loan to somebody on the back end, an investor. So they're only going to hold, if they fund it at all, they're only going to hold it a short time. Some people don't even fund them at all. They're always working with those banks, and the banks are actually doing the underwriting and the processing of that file. And then it goes straight to that bank upon close of escrow. There's not one that's better than the other. It's whatever program works best for your clients and gives them the best opportunity and can actually get the deal done. Keller Mortgage sells most of their products. So once they close it to a third party on the back end, they're going to sell it to an investor, which is why like Keller Mortgage doesn't do a lot of, back in the day, we would have called it subprime paper, right? They don't do a lot of really low credit scores, or if your file's really complicated, that's not Keller Mortgage, right? Keller Mortgage is for like nice, clean, average, above average credit scores. We can really easily show our income. We can document everything. We're not going to be a super complicated buyer. That's Keller Mortgage, and Keller Mortgage is good too. They do no lender fees and then $1,000 towards your closing costs. So it's a good option as well. Their interest rates are competitive for the most part. They'll match or beat somebody else's interest rates on all their programs, and they can get them closed now in like 21 days too. That being said, I do like to keep business local. Right? So
shop small.
So yeah, it's fiduciary responsibility, right? So when I refer people to lenders, I always put my top one on the first, right? My primary choice, which is usually a local lender. And then I usually give them like a Keller Mortgage option, because if they're shopping like those online Rocket mortgages and stuff, I want something that's going to be competitive to what they're going to see there, or what they're going to see as a competitive option. Although Keller Mortgage can beat just about anybody. And then I usually give them a banking option like Travis Credit Union, in case we've got those buyers that are just like, I do business with banks. I don't do business with brokers. Lenders. I just want to deal with a bank. I give them a banking option as well. So that's usually kind of how I roll on that. My lender may fluctuate based on is looking to accomplish. So if I know it's somebody that's looking for like down payment or closing cost assistance, then I may put that top one, the local lender, maybe somebody who specializes in that.
Amy, are you giving your clients all these options up front? And like, are you going over lending numbers with them? Or are you just giving them like, hey, let's try Travis, or reach out to Travis, reach out to whoever the local one, well, Travis is local for us, but whatever, let's say America, reach out to Travis and then reach out to whatever other one. Because like most of my clients, I've just been giving them like one specific lender at a time. Now, unless they say they don't person, then maybe I'll find, I'll find them another one, but I'm not giving them multiple options at once. So should we be doing that? Because to me, it seems kind of confusing for them, especially the first time home buyers.
Yes. So that's probably a bad teaching moment on my part. You should always try to give multiple options when we do referrals. And that way we're not pigeonholing our clients, and we're not responsible if it goes bad. Like technically all the documents they say that we're not responsible, but if we're only giving them one lender option and they're calling that lender and then they have a bad experience, then they're going to associate that bad experience with us versus that's who I chose off the piece of paper. So yeah, you should always give them, try to give them like 3 options. And again, you always put your primary choice on the top, because most people call the first one on the list.
So what I've been doing was, because I'm that same way where I'm like, okay, I want them to, because I feel like, and that's again, the vibe might be good here, or what they're looking for, that would be a good suit. So then what I'm saying is like, you do have the option to shop around. I've learned that, if they pull a hard pull, you don't have to be just stuck with them. It's not going to ding you, but you do have a time window to go search other lenders. So I kind of like putting that out. But then I also say, like, well, if you're not really, that's not that person, you don't seem good, I do have other options. So leaving it open, but I'm not giving them all of them, because normally what I'm trying to do is get a hold of the lender to call them versus them calling them, because then it seems to never happen in that degree. So on that, I still generally refer 3. However, I will be like, hey, Ruth, here's our list of lenders. I know you're looking for some down payment assistance, and this person here, they kind of specialize in that. So there are some other options, but this person specializes. This is my go-to VA person. Like, she can knock them out in 17 days. The appraisal's done in like 3, right? Like, she is our competitive edge when it comes to getting a VA offer accepted. So I will like talk about my top pick as well, but then let them know there are options available. And then I'll still turn back around and be like, hey, Sonia, can you reach out to these buyers? They're looking to get pre-qualified to do a VA purchase, right? So I'll throw it to my main person, even though I've given them 3 names. Got it. Okay.
And it's just, like I said, it just comes down to best practices. So it can be confusing for a first-time home buyer, but you want them to know there's options. You don't want them to feel pigeonholed into one. Mm-hmm. And still we want to pigeonhole them.
Working. Got it.
How's that?
I did have one question on lenders. So I have a,
Yeah.
a client right now that he was in contract with the house in Riverside and then had to come out because he got a job in Fairfield. So, but he had been pre-approved down there. But if he moves forward and wants to continue to use that lender, like that shouldn't be a problem throughout a transaction, right?
It should
Because
not be a
he's
problem.
down that way.
As long as, so here's my general rule of thumb with lenders, right? So it ultimately shouldn't matter who a buyer uses as a lender, as long as the lender can get it done. That being said, when we're submitting offers and you've got, 13 offers on one property, having a local lender can give you the edge because the agent may know that, hey, I know that lender and I know they get stuff closed. Like I know their track record versus I know nothing about this lender in Riverside. Right. So it comes into play just a little bit. That's why I like to keep business local. That being said, there's nothing wrong with them using that lender. They've already done a lot of work for them. They had to cancel because now they're moving. Like it could be friend, who knows? There's definitely some things there, but I would want to make sure that there's number one, a direct contact, that I'm just not calling into a phone system and hoping somebody's going to pick up. Number two, that they are willing to call the other agent and answer any questions that they might have regarding the buyer, and that lender has in fact, reviewed their income and asset documentation. They've actually pulled their credit, right? Because if we're talking about using somebody that I'm not familiar with, I just want to make sure they've gone through the entire practice so that when we submit an offer on a property, we know that we're good to go for the loan.
Got it. Okay, cool. Okay.
And then sometimes with job transfers too, right? So we've got somebody transferring in. Just something to be aware of with lenders is oftentimes we're either going to need a letter of intent signed by the employer and the buyer showing what their salary and everything is going to be and when their start date is. And sometimes they will require, like we don't have that and they've switched jobs, whether it's locally or transferring or whatever. Oftentimes, as long as it's in the same industry, it's not a problem to go ahead and buy a house. And sometimes they need one paycheck before the close of escrow from that new employer.
Got it.
Right.
Okay.
So if your buyer loses their job into a transaction, they're like, it's okay, I got another job. Usually the lender can recover it. We just need that one paycheck. So we may need to extend escrow or something to make sure that we accommodate that first paycheck coming in.
Cool. Okay, good to know.
So always check with the lender on what their requirements are when we start talking job changes and transfers at the location.
Amy,
Yes.
is there a way that we could possibly get a list of, say, your top 10 lenders? That way we can create like a file or something that we can send out to our clients.
I can work on putting that together. I mean, I really, truly, I can't think of anybody in town here locally that I would be like, ooh, don't use that person. Like you've got, Sonia over at Homeowners, you've got Kashayla at Caliber. There's also Bo Beto over at Caliber and Alex Beto. You've got Brandon Boycelli opened his own company. You've got Tom McGuire over at Movement Mortgage. You've got our in-house lenders that we have, Loan Depot and Danny with Cross Country. They keep changing names. I have to think really hard of who they're with now because everybody's like, oh, it's like the great lender shuffle of 2020 to 2022. Everybody's changed name. So I honestly can't think of anybody that I would hesitate to work with locally that I've come across. That being said, so I would start making some phone calls, right? Talk to some different people. Then we have some that come to our meetings. If you're going to the association meeting or plugging in that, see who's checking in on that all the time, who's on your feed list. Like go reach out to your social media. Hey, who is a lender or who has a lender that I should know, right? Like let's start building those relationships, and you want it to be reciprocal. Okay. And what do I mean by that? They give me leads. No, not necessarily. I mean, ideally that would be great if your lender gave you leads, and there might be something of value that they can offer you that would be worth you giving them clients, right? Because you're giving them business. So you want to, like, maybe if you're doing open houses, do you have somebody that's going to go sit at open houses with you, right? So that you're not there by yourself and you've got somebody that's both working towards a common close, working together, right? You're not having to share leads. Do you have a farm, and would they be willing to co-market your farming material and help you cover that cost? Right? There's a win. If we have a farm and we're sending out 400 letters a month, that's going to get up there over time. At 200, you're looking at, if you're mailing them out, that's about $100 a month in mailers. So if you can get a lender to split that cost with you to co-market, that's a win. So just different things like that. If you're doing events, are they willing to help sponsor events with you? Right. So what kind of skin in the game are they going to give you for you to refer them business? And so it's not always as cut and dry as give me leads. It could be something else of benefit, that helps you to be successful and makes it a win-win relationship. And that's the same with any relationship, right? We want it to be a win-win, and we want it to be reciprocal. If we're going to give our vendors business, we should expect and not feel guilty about expecting something in return from them.
I was having a lender at the open house I did, not last weekend, the weekend before. That was really nice because, like I said, the conversation was just more in depth. We were able to get more things out. I was able to learn more what they were interested in. She was able to, so it really helped the conversation than just, oh, hi, how are you? Really trying to draw it out of them, So yeah, that was good.
Hey, speaking of open houses, if I could ask a question.
Yeah.
I know we often volunteer to help out for open houses within our market center.
Yep.
Can we ask to host open houses for others at other brokerages?
Absolutely. There is nothing wrong with that. I highly recommend it, especially if you've got a farm area. You should be hosting every open house inside your farm. Now, the one that I'll say you're wasting your breath on is if something is listed by Coldwell Banker Capital Gateway, or CBKG. They have a company policy that doesn't allow them to let other agents host their open houses.
Okay.
But, McGuire, Rapizarda, ours, regular Coldwell Banker, all those should, oftentimes they'll let you as long as they're not hosting them.
Any
Century
advice?
21 won't let you do it either.
What was your question? Tara?
Oh, sorry. Mine was just any advice for that as far as coordinating that. I mean, do they just kind of let you take the reins on it, or should you work with them on what to prepare for it, or what?
No. So, right. So this is where it comes into systems and processes. So generally speaking, it's just calling them up and being like, hey, Melissa, I saw you had a listing over on 123 Sample Street. It looks like, this second weekend on the market, I don't see any open houses scheduled. Do you mind if I schedule, or even, first weekend, I don't see any open houses scheduled. Do you mind if I help you look like a winner to your seller and I host an open house for you this weekend? And they'll be like, oh my gosh, thank you so much. I was going out of town and my seller was kind of on me about it. I didn't even know that there were people willing to do that. You can be like, yeah, absolutely. I'm happy to host the open for you, right? Now we're doing them a favor. So we kind of come at it from contribution. And then what I would do is send them over okay, so after we confirmed it, then I would email them and be like, hey, best practices for open houses. Can you please let your sellers know the following? Number one, our open houses from 12 to 2. I'm going to show up closer to 11:30 and plan on me being there until about 2:30, right? So we're just going to let them know that, hey, there's this window I've got to set up and tear down. Please ask them to, make sure any valuables and prescription medications are out of sight and not in the top drawers of any of their cabinets or whatever, because sometimes people open cabinets. Please know that I'll have 2 people there. It'll be me and my lender will be hosting the open house to provide security. We also require everybody to sign in at the open house. And then at the end of the open house, I will report back to you and kind of let you know how many parties we had through, what the interest level was. And if there were any agents that came through with their clients, I'll pass you off their information so that you can follow up with those agents. Does that sound good? Right? So we're just like, hey, I'm going to be friendly. I want to be your go-to. Next time you have a house, I want you to know that you can call me and ask me to host your open house, because I'm going to be so thorough. And so I'm going to put your seller's mind at ease. I'm going to put your mind at ease. And I'm going to report back to you on, hey, we had 15 parties through. Here were the 3 agents that brought clients through. You can follow up with them. I'm going to follow up with the rest of the leads, right? So that way they have something to report back to their sellers, keeps everybody happy. It makes it kind of a win-win situation.
The one that I just did the last 2 weekends, well, it was my dad's neighbor across the street, so that's how but the mother-in-law was selling it because it was this close to having a real problem. No, I'm just kidding. But so anyways, but I had called her, but she's actually an agent out in Sacramento. So that's another thing, kind of pay attention, like, because you can open up or you search on there to see where they're at, like what branch they're at, because they might not want to come down this way, you know? And so I actually held one on Easter, which surprisingly we had like 11 groups through on Easter afternoon.
Wow.
I figured I was just gonna be sitting there all day. And then I did another one because they didn't get any offers through the weekend, because, you know, it seems like that shift is a coming. And so, but anyways, but that was going to be my thing of saying, like, look and see if they're local, because they might not want to come down this way. That's a long drop from, you know, up there to here to sit around. So yeah, that's my only takeaway from that.
I do have a question.
Yeah.
So when you host the open house, the clients that come in, or potential clients that come in, do they go into your book of business, or do you share that with the person who's actually selling the property?
They go into your book of business.
Okay. And then when the sign in process occurs, is it something that's like high techy where they have to like do it online? Or is it more so just a sign in piece of paper? Because I come from Berkshire Hathaway and they just had a different way of doing things.
Yeah.
So I wanted to try and see, like, you know, the process that you guys have.
Yeah, absolutely. So we don't have any process set in stone. I do recommend as a newer agent that you maybe reach out. If you see some agents are hosting open houses over the weekend, like reach out and be like, hey, Melissa, do you mind if I shadow you this weekend and just show up and kind of see how you run an open house? Or, you know, if DPC has got one or whoever is doing an open house, like shadow a couple different people to see some different methods. And we don't have any one set way for sign-ins. We have it set up where in Command you can create a landing page and it goes, you could have them sign in digitally. It goes straight into your database. So you don't have to do that. Also makes it a little bit more legible to do it that way. I'm not the biggest fan of digital sign-ins because I don't like people touching my stuff. That really is what it comes down to. Yeah. When I was doing open houses, I usually had a paper sign-in. And again, there are, you know, sign-in lists where you've got 15 names on one page. They just sign in and you call it good versus individual sheets. I prefer the individual sheets versus a bulk sign-in because I feel like people are more honest if they don't feel like there's information sitting out for other people to look at. And then I also ask them some additional questions on those sign-in sheets. So, you know, it's personal preference and it comes down to what works best for you and what you want to do in your business. Since you are building your own business, we're totally flexible on that. It's not even necessarily required that you make people sign in. However, I would highly recommend that you make everybody sign in because I feel like for safety and security of just knowing who passed through the property is good, as well as when you require people to sign in, if people were going to come in and be up to no good, it tends to make them want to walk away.
And I literally, that's my sign, is just that, like, for security purposes. And the only thing in red is all parties must sign in. Yeah. And I have that on the sign in table and I have never had anybody question it or not, you know what I mean? Just, yeah. But then, like I said, I do like Amy said, I do the sheets because then I like to write all the notes of what I'm finding. Oh, the guy had blue hair, you know, that he had 5 children. Like, I put all of that because that really helps me bring back the conversation, not just real estate later as well. Just gives me another edge, I think, of communication.
Yeah,
so,
that's what I always do. If you look at all my open house sign-in sheets on the back, it's got notes for who they were, what they look like. That way I can remember, like, as I'm brain jogging 2 days later to call them back, like who they were, what they were interested in, what they were looking for, how long they've been looking.
This is mine right here, but if you can see, the back is all my notes from the person. So, like, yeah.
And if you want an example of the sign-in sign, I've got one in my little cubby that has a bunch of little random stuff in it, the pop-bys and the stuff. There's a sign in there if you want to see, like, it just says, you know, this is a private property. The current owner kindly requests that you sign in upon arrival or whatnot. So, you know, we ask them nicely and we require it. I have turned people away.
Absolutely.
Amy, I have a question. I'm sorry, I had to take a call. So if you already answered this, just say I already answered it. I have a client who was working with somebody, a lender, and they mentioned to me that they want to go with more of a brokerage And I'm not quite sure what that means. He did mention that there's a guy in, I think he's in San Francisco, like Bay Area. His name is David Green. He works for KW. He's got his own brokerage called One Brokerage. And so I spoke with them there. There's him, and then I think, I can't remember the guy's name, Anthony or something. It's David and Anthony. They own it. And David's an agent, but he was saying, oh no, we won't take anybody's clients. Like, oh, you work for KW, that's so cool, and blah, blah, blah. But I just don't, I think like when you were talking about, which I thought that's a great idea. I'm going to go and talk to banks too, and talk to people and get a feel of who, what kind of referrals to put out for people, like, oh, this is a good lender for this or that. But when somebody says they want to do a brokerage, is that like what you're saying, like to refer them to, what'd you say, to Keller Mortgage, because they're trying to get, is that where they're trying to get like multiple people bidding on their loan? Is that what it is? Or
Yeah, so right, so we have banks, and a bank is also oftentimes a brokerage, but they sometimes don't have as many options, right? When you go to your regular banks, like your Travis or your Valley Strong or your Bank of America or whatever, you've got regular banks. You have portfolio lenders that fund all of their loans in-house. And then you've got brokers, and even your portfolio lenders that fund them in-house, they still broker them out. So they're still looking at what the rates are and what everything is. But yeah, when somebody says they want a broker, they're really looking for like a Caliber or like a Movement Mortgage or a Cross Country. Like brokerage doesn't have to be in the name. They're just looking for a mortgage broker versus a bank, because there's more options available to them. So what that means is that, if I am Brandon Boyaselli that was a really bad example because I can't come up with his name right now of what company his company name is, but at what ABC Brokerage or ABC Loans or whatever, right? Like he's taking Melissa's information and saying, okay, well, Melissa has a 750 FICO score and she's got W-2 income and she's got, 7 months worth of assets in the bank, and they're wanting to put 10% down. Who is the best investor that can take that product, that's going to be able to get it closed and give them the best rates, right? So that's what a mortgage broker is doing. They're going out to their pool of investors and they're saying, who can I place this with that's going to give us the best for this situation? So that's what they refer to. Most of our local lenders that aren't banks are brokers, because that's what they're doing. They're selling. A broker's just selling the loan. They're helping to facilitate the connection between the buyer and the bank that's going to hold that.
Okay, so maybe his issue is deeper than that, because he was working with Danny and then said, I want a brokerage. And I was just like, it kind of threw me off. I was like, oh, I'm not a lending person. Like I'm financial on my whole family, but I'm not good with all that. So I was kind of like, okay, well, and so I looked into that guy, like I said, the One Brokerage, and I was like, if you want to go for it, go for it. But I go, you just have to tell him you're working with me and that you're signed with me. So that way, that's what the guy told me to tell him, like, just let him know that he signed with you already,
Yeah.
So
okay. Yeah. So I'd find out more. So if somebody's like, I want to work with a broker, I would just go, can you tell me more about that?
Okay.
Right. Can you explain to me what your definition of a brokerage is and what you're looking to accomplish? Right. And that way we can help place them with whoever that would accomplish that fee. And some of them, like I think Danny is with, does more in-house deals that then they broker out after they close versus, so it's truly the same thing. Like we're just looking for somebody who's got a wide array of programs and can get you has people to shop it between different lenders for different rates, basically.
Yeah, because I was thinking, well, maybe I should tell him to go check out Keller Mortgage.
Yeah.
But I mean, if he's trying to.
And Keller Mortgage, and you could always let him know too, because I would much rather, send them to like Keller Mortgage than this other brokerage place. Again, when we start talking about like people we don't know, I would rather send them to Keller Mortgage. And you can let them know that, hey, Keller Mortgage, it's a mortgage broker. It's in-house. They don't charge any lender fees, which most mortgage brokers are going to charge you a processing fee. And they give you $1,000 credit towards your title and escrow fees, and they can meet or beat any other rate.
Right.
And most of the rates are pretty good upfront. And if you came across one that was lower and you send it over to them, they'll meet it.
Yeah, yeah.
Plus no fees.
And what was, I'm sorry, with Keller Williams, not Keller Williams, Keller Offer, shoot, if I'm getting a copy, but,
There's too many colors.
I'm telling you. What is it like? What do you have to come in? I feel like you said like there was like qualification.
Oh, for Keller Mortgage, it's a little bit more like what you would call A paper buyers, right? So they're solid credit scores. They're going to be like your mid 600s and up with like provable income, self-employment's okay as long as it's on the tax forms. Say that again, Camille.
Just a pretty clean profile, like it's
Pretty
just
clean
simple.
profile.
Yeah.
Yeah, we don't have a whole lot of like, we're not trying to do, you know, that son and daughter-in-law are trying to buy a property and then we're going to have a non-occupant co-buyer with like gift funds from over there. And, you know, it's not like super crazy. Yeah, not a hot mess.
That's a good thing you brought that up. I have a question about gift funds. Do you guys
Yeah.
have a program or a lender that you work with that basically has a way for gift funds to be used? Like a
Most of
kind
our-
of like a streamlined way?
Yeah, most of our lenders allow for gift funds to be used. We're gonna have to, they're gonna have to source them from whoever's gifting the fund. So like if my mom's gonna gift me some funds to buy a house, we just have to see her bank account showing those funds actually came from her. So they need to be in that account. Not
Okay,
like
so
deposited in that account, like drug money.
Not
and
under the
then-
mattress.
Right.
And then also we'll need a gift letter just stating that so-and-so is gifting funds to, you know, Amy Picard for the purchase of a home. And usually it has to be like a relative, although they don't ever actually verify the relationship there. Just throwing that out there, but usually it has to be.
There's a lender that I was working with that actually has a program where it's almost to the extent of like a GoFundMe, where it's a way for people to create a file. That file is associated with one particular real estate agent for the life of the time that the file is open. And then from there, they can have people gift them money, and they can post it on social media. They can post it, you know, wherever. They can even have a QR code created, and that money for some way somehow gets verified, you know, in a way that makes it easier for people to use it towards down payment or whatever.
Towards down payment. That's cool. See, that would be a reason to utilize that lender, right? When we talk about reciprocal relationship, having a program that other people don't have that may benefit people moving forward allows multiple people to kind of gift them some funds in order to help with the home purchase. Absolutely.
Yeah, they kind of sell the idea as like a savings plan. You can even set it up for a kid so that by the time they get ready to try and purchase a house, when they, you know, become of age, they'll have this money kind of set up for them. In a trust. Yeah.
Cool.
So what about, just so, because you were saying, so if you, let's say your parents, you know, back in the day, they put all the money under the mattress. So, but they're like, oh, I want to help you. But now they have to just get that money into the bank. And then from there, so if they put that money into the bank and then all of a sudden poof, it's there. It's not like it works, like, because now they're just showing, well, the money's here and now I'm giving it to.
So yeah, so I don't know if the lender, it's been a while since I've done a loan with gift funds. I don't know if the lender is going to require 1 or 2 months of bank statements from that person gifting the funds to prove that it was their money.
Got it.
So assume that if I've got money sitting under the mattress, I need to put it in the bank today, and then we probably need to wait 2 statement cycles before we can complete the purchase.
Good to know.
And that's the same for any buyers too. Just for the record, their money needs to be seasoned for at least 2 months, which means that it needs to be in a bank account. And then we need 2 statement cycles so that we don't see the actual deposit.
Got it.
Okay, we don't want to see the deposit on the transaction list for their bank statement, because then it's going to raise red flags of where that money come from. If you're like, well, it was just under my mattress, they're going to be like, that's drug money. Sorry, we're not taking that. Or right. So it just needs to be sourced for 2 months. Now, if you could source it back, like if you could say, oh, well, I had sold a piece of property, or I sold a car, or here's the 5 things that I sold to make up that 20 grand. And we have like bills of sale and stuff. You can absolutely use that as long as there's a paper trail for where that money came from, and not that you sold drugs or that you are laundering money or whatever. Right. So we just need a paper trail to be able to prove where those funds came from and that they belong to you.
Got it. That's cool. Good to know.
That's funny because, you know, some people really don't do bank accounts. So I think
Some people really don't.
They really don't. Like, I mean, that's like our client, Amy. Like, they're trying to pay off that house, right? And he can't pay it all because he has the money under his mattress basically, but now he's having a friend gift him all the money so he can pay it off.
So
And then he's gonna give the friend the money cash.
the Hispanic community is it's very consistent within that community that they just don't trust banks.
Yeah.
And it doesn't matter whether legal, illegal, it really doesn't make a difference. They just have been, that's just part of their culture is they were just raised to not trace it. So they often have significant amounts of cash in their house.
Right.
Don't go rob people.
It's like, it's
but yeah,
crazy.
it's just a cultural thing.
It is. It's my parents are the same thing. They're like, the bank this, and I'm like, oh my God. I'm like,
people who grew up in the Depression era. In the house, I had grandparents who had money in closets, in clothes. I found I was going on my senior trip in high school, and I used one of my grandmother's old like little carry-on bags. I found like $500 in old 50s. So yeah, I understand.
Yeah.
She's like, oh gosh.
There was a house that sold in the Bay Area several years ago that the people found like it was like a couple $100,000 worth of cash hidden throughout the house in the curtains, like they busted open the seams and like put stuff in the bottom of the curtains and like all over the place. And I think they had passed away and the heirs had no idea, and so they cleaned out the house and then sold it, and there was just money
busted
everywhere.
out a wall to open up the kitchen.
Yeah.
Hide in a Bible.
Yeah.
Oh my God.
Yeah.
In the freezer, underneath the freezer, in that little, the old school
Yeah.
freezers, I used to pick up that little thing. You'd be like, oh, grandma got some money in here.
Yeah.
No,
That's
that's
like
why I
funny.
asked if there was one of the people that came through the open house. So, that was, and I was like, I know that there has to be that paper trail there. So but that's good to know about like the 2 months of like, so it just doesn't show that it was just deposit.
You don't want to
that
show
it
the
just
deposit.
stays there. That's good.
Mm-hmm.
And
Oh,
go ahead.
I was just going to ask a quick question. The SMCO, the multiple seller counteroffer. Yeah, I just figured out your text 7 hours after. I was like, what the heck was she must have been trying to talk and didn't know what she was saying. The thing picked it up. I was like, what is SMCO? And then I was like, SMCO. And I was like, okay, Heather, what are you asking her about? And I was like, oh, you're asking her about the seller multiple counteroffer. Wow, that makes so much sense. So, so when you counter like 5, like we countered, each one is 1. The first group of all of them that goes out is 1. It's not 1, 2, 3, 4, 5, right?
No. So
okay.
Heather's question was last night, she had her San Leandro property got multiple offers. We're going to do a multiple counter offer, right? When we counter offer, we have a seller counter offer or the seller multiple counter offer. With a seller counter offer, you're just countering one party. If they accept that counter offer, we're officially in contract and it's a done deal as long as it's before the expiration period. With a multiple counter offer, we can send out multiple counter offers to different parties. It doesn't matter whether you have 2 or 4. You can't just send it to one though as a multiple counter offer. Don't try to do that. It doesn't work. And there's a number at the top of both the seller counter offer and the seller multiple counter offer. The first counter offer you make to any party is a 1. So if I'm making a counter offer to Melissa and a counter offer to Heather, it's my first counter offer to Melissa and my first counter offer to Heather. They would both get a 1, and that would be on the multiple counter offer form. On the multiple counter offer form, you send it out. Just because Heather and Melissa both sign it and return it back to me, it's not first come, first serve. It is once I decide that I'm ready to review those counter offers, I pick the one that I want to move forward with, and we sign that we're moving forward with that counter offer. So it gives you the choice of who you move forward with. And if during that time period, somebody better comes in and makes a better offer, I can choose to go with that offer and abandon all the counter offers altogether. With a regular counter offer, if we're just countering Melissa and Heather missed out, if I've got that counter offer out and a better offer comes in, I have to do a withdrawal of offer before I can move forward with the other offer. And if I don't do the withdrawal of offer before Melissa signs it and returns it to me, we're in contract. It's a done deal.
Got it. Now, and then I've seen that happen in the office the other day, but if you can verbally quickly call, even if they, you know what I mean, and you can stop it there.
You can, yeah, I would recommend if you're doing a withdrawal of offer, you call and text the agent at the same time.
Got it.
To let her know that, hey, just a heads up, or let them know it doesn't have to be a her.
Okay.
let the agent know that we're withdrawing our counter offer, we're withdrawing our offer. I'm sending you a text message as well, just for confirmation. That way, if you leave a message and don't verbally, that way you've got a timed, like stamped confirmation, and then also send the confirmation of the withdrawal of the offer. It's in the WOO form.
And then, so back to her counter. So you said, because ultimately it's for more than one person, it's in the multiple counter
Yeah.
offer. But let's say she had 5, but 3 of those out of those 5, they're like, yeah, we don't want to counter at all anything. Could you just do 2 out of the 5, or do you have to do all 5?
Nope.
Just because
You can choose how many you want. You can counter everybody. You can counter just 2 people.
Got it.
It doesn't matter with the multiple counter offer. And they don't all have to be the same.
Yeah.
Right? The terms on every counter offer with the multiple counter offer, it might be all different terms. So like oftentimes when I get multiple offers in, there's usually one that's like an obscene offer that you're like, they're just trying to like get their foot in the door, and we'll see. So oftentimes I'll counter something back, like, to call their bluff, right? I'm assuming that they're trying to like do something and then they're going to weasel their way back down or whatever at some point. So I usually try to call their bluff. I usually have like a safe one. And then hey, I think these people will come up to, like, I've had some conversations. I'm pretty sure they'll come up or do what we want them to do. And then I've got my like, Hail Mary, like if they accept this, that would be great. But we don't know. I think they're bluffing, right?
That makes sense.
And you can't always do a multiple counter offer of highest and best. That's not my favorite. Because again, now we're throwing darts at a dartboard and hoping something sticks. I'd rather like give them a target of something to aim for. Like, here's what it would take for you to be in first place. And when you receive a multiple counter offer, you're not stuck with that multiple counter offer. You can still counter offer the multiple counter offer with either better terms, or if you don't agree with something, you can change it. It still may put you in first place. We don't know, but you're not stuck with that.
Got it. Good to know.
Hey, Amy, on that
Yeah.
note, when you're countering, so when you're reviewing with your clients, like I know that we've talked about this in Conversations with Confidence over and over again with Mindy about how we're to bring our clients back down to earth, right? Because they've said, I want a 3-bedroom, 2-bath, and now you're looking at a 1-bedroom with 3 bathrooms, and you're like, what the heck are we doing here? Like, why are we switching up, right? So
That'd be really cool. A
I-
1-bedroom house with 3
I know.
bathrooms, just for the record.
I just was like, you know me, I'm like all over the place. I'm getting it done though, so it's all good.
It's all good.
So my clients very adamant about wanting a family, wanting somebody who's going to take pride in their home because they lived there for over 20 years, yada, 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 right? It's like from the beginning, okay? Friends of mine. So I'm like, okay, then last night, all of a sudden we get a cash deal that's literally 80,000 less than all our other offers. And they're like, oh, well, cash, hold on. Da, 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 da. And I'm like, okay, this is an investor. Like, I'm trying to so it's like, how do you, I'm like, first of all, I have I hate cash buyers. First of all, I'm so sorry, but I don't like these investors because they're ruining it for all these people who really want the home for themselves, So it's like,
Okay, so Heather,
yeah,
your
Yeah.
job is to help them make a business decision.
yeah,
So we don't care if it's an investor. We
yeah,
don't care if it's a family.
I
We
know.
don't care. Okay. And
That's
you never
hard.
know, maybe that investor's picking it up because they're going to rent it to their kids who can't afford a home right now.
Yeah, well, he hasn't responded to me, so
Well, I'm just saying, you don't know what
Yeah.
the situation is. So
yeah,
our
that's
job,
true.
our
That's
job
true.
is to help our clients make a good decision, a good business decision. And we've got a cash offer that comes in and it's 80,000 below the other 2 offers. Like a
Yeah.
good business decision says that the other offers are more solid, as long as
Right.
you've got like removal of appraisal contingencies
Right.
or right. Like
Yeah.
it can be equal to that cash or better because we're getting more money. Like how much are you willing to throw away for cash, right?
Right.
And it's all in your pocket. It all comes in as cash.
Right.
Right? It's
Yeah.
just we have to go through the underwriting process. But if we've already talked with the lender and we know they've reviewed their income and we know they've reviewed their assets and they've looked at their credit history and they've already underwritten the file, like that's as good as cash in my book,
Right.
right? Especially if we have
Right.
no appraisal contingency and we verified the cash is available for them down payment or an appraisal gap, like right? So we want to make a good business decision.
That's
Now,
true.
if it's a $10,000 gap between a financed offer and a cash offer, might we decide to go with the cash offer? Absolutely. But are you willing to throw away $80,000 for something that could have been just as sure of a deal, even though it's got financing associated with it, right? So we just want to have that conversation. If our sellers are like, hey, it's really important to us that there's a family in here, then absolutely, you're going to disclose that information to them and let them know kind of, hey, this is an owner occupied, or we ran into these people at the open house and they were a nice family. I haven't talked with these people, but I did talk with the agent because I knew it was important to you to find out what these buyers' situation was. I haven't actually met them, but it is a family of 4 that's, looking for their first home. So if your sellers ask for that information, it is okay to disclose that information. On a normal sale where a seller is like, hey, I'm hiring you to sell my home, I would not disclose that information to them up front before making an offer on it or a decision on an offer. But if that's something that's important to your seller, absolutely, like, keep them grounded and let them know. And I might remind them that, hey, even though, this one's an investor, maybe the highest offer or the best offer is an investor versus a family, you might be like, hey, like, I know this one's an investor, but business decision wise, this is your best bet versus making a emotional decision based on, passing this off to another family. Now, that being said, I've talked to the other agent. I know this person can come up a little bit. I don't think they can come up as high as the investor has come up. And oftentimes the highest offer that falls through anyways. Right? So we always weigh this, especially in this market, those people that are like way above everybody else, we accept their offer. They have no contingencies. It's a beautiful offer. And then they never get their deposit to escrow and they cancel out, which there's no recourse. Right. And so we just want to make sure that how solid the buyer is and what that situation is. Absolutely.
There's so much of that.
What was that, Camille?
I said there's so much of that.
There's so much of that.
It's terrible.
It is. I've had multiple ones that it's like, this seems like the best offer to move with. I talked with the agent. Yes, they're on board. Yes, we're good to go. And then you accept the offer. And then, the next day they're like, oh, my buyers decided not to move forward. And I'm like, what? We talked to you. Like, what happened? Should have gone with the other one that we liked better anyways.
Oh man. Yep. I'm emotional. That's going to be a fun journey for me.
It's going to be a fun journey of growth for you, Heather. Growth. And it's okay to be emotional.
It's fun.
We just need to tuck it away when we're making decisions.
Yeah, it's good. It just frustrates me because I'm like, dude, I don't know, like just in life too, like, I'm just like, don't say one thing and do another thing because that just burns me the wrong way.
Yeah.
Like, I'm very like, this is what we say. This is what I do. Don't tell me this thing. And then you over here trying to do another thing now. And then I'm like, wait, I'm sitting there on the Zoom going, you see that this offer is $81,000 less, right? Like, you're willing to take $81,000 less just because they're cash, and they said they can close in one day, and really they can't close in one day because we have to go through escrow. So
you're like, you still provide the HOA documents, you still have to provide the prelim, and
yeah, I'm like, this is not even.
Well, and so somebody who's like that's like motivated. Okay, well, we can close in one day. Okay, well, realistically, like you said, we can't close in one day. And how much is it going to cost you to hold this property for 21 days?
Yeah.
What's the cost to you, right? Okay, it's
Nothing.
going to cost you $2,000, let's say, right? Utility costs, whatever, $2,000. Okay, so you're going to take an offer that's $81,000 less so that you save $2,000, right? Okay, well, let's look at these other offers. And even if it ended up having to extend escrow an extra week, okay, let's say that cost you, okay, well, now we're like a $5,000 difference. So let's keep it in perspective for what we're talking about walking away from, right?
All right. It's crazy. I was just blown away. I was like, what the heck? I was like, hold on, what are we doing here? Like, wait a minute. Like,
well,
no, we're not. I mean, and the guy hasn't responded. I've called him several times. I've emailed him. I've texted him. He, no response. And we didn't even counter him. I wrote him an email because his offer was very sloppy anyways. He missed a lot of stuff. And so I was like, can you please resubmit and fix this for me? And your offer was, over 75,000 lower than all other offers. So let me know. And then we countered the other 3. And they've all come up to what we asked. So now I'm like, okay, well, now you're sitting where we told you.
Yeah.
So they'll see today when we, accept, but we were telling them the one person is going to be the best. And he's like, well, he was sloppy and he was this. And we're like, yeah, he was very sloppy, but he wanted to shut down our open houses this weekend. So he was just trying to throw it in our face. But everything I told him, he has literally changed and submitted to me within an hour.
Yeah.
Like he's like, my clients want this. Like, so it's like, and now he's like, oh yeah, whatever you guys asked. He's like, we're going to sign it and send it back. And we're just not going to do one thing. And I'm like, okay. I'm like, so
what you got to remember too, is that people are ingrained with cash is king, right?
Mhm.
That's been ingrained in us since we were very little kids, especially like those of us over, I would say over the age of like 40, like that's just, it's cash, right? And so it's overcoming that. So people always hear, well, the cash offer is best. And so it just comes down to having to explain to them why the cash offer might not be best, right? Right. Coming down to like we talked about, like, look, what's it going to cost you to hold this house for 30 days versus 7? And is it worth throwing away $75,000 over a $5,000 cost to hold the property until it goes in escrow on another one? Or even if we fill out a contract and had to get another one, okay, now we're 10,000. Right? It's still not worth throwing away $70,000 over that. If we could get the cash offer up, then maybe, right? So it just comes down to bringing them back in, like you said, like keeping them grounded and reminding them and talking with them and letting them know that, like, just because something's financed doesn't mean it's bad. Like we have the ability to talk with the lenders, to have those conversations, to verify that they've reviewed their income and asset documentation, that they've, you know, run their credit, that this is a really solid buyer and that we're good to go, even though they're being financed. Right. So, so yeah, so it's, you know, there's nothing wrong with that financed offer.
I don't think so.
Any other questions before we wrap up today? I feel like this was a really good conversation about loans and lending, all of that and how that whole process works.
I got kind of a side note, something a little bit different. I'm just a curiosity about, do you guys feel like the market is cooling off? Or you guys that have been doing open houses, are you seeing less activity? Is that kind of a true statement or no? I'm just curious. I know Nathan Scott has already, he dropped his listing like $10,000 after just one weekend of showing the house. I'm like, man, is the market changing and shifting right now?
So I would say on that mid, like sub 700 market, you're not seeing much of a shift. You're seeing maybe a few less offers come in, but you should still probably expect your house to go into contract on the first week on the market, unless you've priced it ahead of the market. You've priced it too high. Once you start crossing over that 700 up into those upper like $1,800,000, $900,000 price range, there definitely is, it's slowed a little bit because you've got less buyers on the market with the interest rates going up. Like when you talk about a $600,000 purchase versus $1 million purchase and a 1% interest rate, like that's a huge jump in payment, even for the $600,000 person, but especially for the $1 million. And so people are kind of rethinking and getting their legs up underneath them. Is this going to cause a market downturn? Probably not. We're just going to see, my guess is we're going to see a little bit of a pause. I think in the lower price range, you've still got people that are like, you've got all the first time home buyers or the people that are just trying to get in the home that are like, well, rates are supposed to continue to go up. So this is our chance. Like we kind of need to get in now. But you still have some of the fallout of people that are tired of writing multiple offers and they're tired of losing out and they're tired of missing out. And so you've kind of got this weird thing going on, but you're still getting multiple offers. And we're heading in the summer season, which usually it picks up. So I don't anticipate it dipping in the summer. I think you'll see it maybe level off, and then it'll be interesting to kind of see what the fall brings, but I wouldn't expect any big major dips or anything. As interest rates continue to go up, I think you'll see more and more buyers kind of fall out of the market. Hopefully we'll get back to like a balanced market. I think I pulled active properties on Saturday or Sunday. There was still 108 where we should have like 200 in Vacaville for a balanced market. So we're still well out of balance.
And there's still tons of buyers because multiple offers. So that's what you can tell your sellers, like there's multiple. But I think too, like I see Nate's house every day because I drive right past it because it's right outside of Browns Valley by Markham. So I drive that way every day. I see that house too.
It really
And the big thing
surprised
for
me.
his, the big
Mhm.
thing for his house is
Mhm.
he's that person's military and they're leaving like soon. So they're trying to get that done as quickly as possible.
Well, he said 60 days rent back on his listing.
Right.
So
I
that's,
mean-
that's a big rent back for some people, don't want all that. But Amy, on that note, Alpine and San Leon,
Yeah.
they're not Browns Valley, right?
They are not
I
considered
didn't think
Browns Valley.
so. Okay. I
mean,
didn't think so, because I was gonna tell him that because he says it's in the highly desired Browns Valley and that's not, I'm like, that's not Browns Valley. We're Browns Valley from Woodcrest up.
People kind of consider those two streets Browns Valley because they don't want to associate them with Markham, so it's all right. And I think he said right at the entrance of
Yeah.
Browns Valley is what he
No.
phrased it as,
That's
so I
what he
think he's good.
Oh, okay.
Nate,
Yeah.
did you have a question?
Who, me? No,
Yeah,
no, I was just, making that note. Like, it was just kind of surprised me to see the change in the list price,
Yeah.
after just Greg, because that was just 1 week, right? Greg, that was the first open
Yeah.
house last weekend.
Yep. And then I've got a client possibly that's going to be interested in it because they came in for my open house. Of my 3 people that came, one
Mhm.
two being neighbors who gave me an address of One Quality Drive. And then another one that just happened to see the signs of for when they were coming out of church, came in. They weren't even in the market, and they said, "Well, there's a lot of houses in their neighborhood coming up for sale, but they really don't want to buy it within their neighborhood because it's really pricey. But this is in their price range." So
Yep.
I'm headed to an appointment with them tomorrow afternoon. So
Nice.
Good stuff. Congrats.
Great job.
Good
well,
stuff.
3 people. I mean, 3 different people coming in, 2 of them being neighbors and 1 random. And out of the whole 4 hours I was there, and I get an appointment out of it. Hey, I'll take that.
Right? That's the
yeah.
goal, just one.
Yep, that's all. Yep,
That's the goal.
that's the work.
Mhm.
All right, y'all, I will be on this evening at 8 o'clock. If there's a specific topic you want me to cover, let me know. We'll have our check-in tomorrow and our check-in tonight. So if you need anything before then, give me a holler.
All right, bye.
Come on.